Hey everyone, and welcome to the AI Tech channel. Today, we're diving deep into the Tesla roller coaster. Shares are sinking, and investors are panicking. Is this a temporary dip, or is something fundamentally wrong with Tesla's strategy? This isn't just about one bad day. It's about the future of the company. Buckle up, because we're about to unpack what's really happening. Is Tesla's AI gamble paying off, or is Elon Musk leading the company down a dangerous path? The answers might surprise you. Okay, let's start with the headlines. Today, Tesla's stock, TSLA, is down, mirroring a broader market sell-off fueled by fears about the consumer. The Dow is tanking, the Nasdaq is feeling the pressure, and Tesla is caught in the crossfire. But it's not just the macro environment. Tesla also announced a recall of over 375,000 vehicles due to steering issues in some Model 3 and Model Y cars. The National Highway Traffic Safety Administration, NHTSA, flagged the problem, which stems from an older software version. Thankfully, Tesla says they aren't aware of any accidents and have already rolled out a free software update. But let's be honest, recalls always spook investors, especially when they involve a brand as closely watched as Tesla. This is a double whammy: market jitters plus company-specific bad news. It's a recipe for a stock downer. The question is, how severe and how long will it last? Now, let's talk about the elephant in the room, the consumer. The market is terrified that consumers are tightening their belts. Walmart, a bellwether for consumer spending, issued weaker-than-expected guidance earlier this week. That sent shivers down Wall Street's spine. But the real kicker was the University of Michigan's Consumer Sentiment Index. In January, it plummeted 10% to 64.7, a far bigger drop than analysts predicted. And here's the really scary part. Consumers' 5-year expectations for inflation hit 3.5%, the highest level since 1995. This is a red flag. It means people expect prices to keep rising, which could lead to a slowdown in spending. And when consumer spending, which accounts for 2/3 of the U.S. economy, falters, the whole market suffers. Tesla, as a maker of expensive consumer goods, is particularly vulnerable to this kind of economic downer. Are consumers going to prioritize a new Tesla when they're worried about putting food on the table? That's the big question. Here's where things get tricky. Tesla has been a high-flying stock for years, but its valuation is, shall we say, ambitious. It's currently trading at 120 times forward earnings. That's incredibly expensive, even for a growth stock. When there's so much uncertainty in the market, richly valued stocks are the first to get punished. Investors are looking for safety and value, and Tesla, at its current price, offers neither. Think of it like this. When the market's booming, people are willing to pay a premium for future potential. But when the market's scared, they want to see solid earnings and a reasonable price tag. Tesla's relying heavily on future growth, and if that growth doesn't materialize, the stock could take a serious hit. It's a high-risk, high-reward situation, and right now, the risk is looking pretty substantial. The market is saying, show me the money, and Tesla needs to deliver. The analyst community is deeply divided on Tesla's future. You've got bulls like Wedbush's Dan Ives, who's still pounding the table for Tesla, citing new vehicle launches as key catalysts. He sees a bright future ahead. But then you have bears like Gordon Johnson of GLH Research, who's predicting a disastrous upcoming quarter, with sales plummeting in China and Europe. He paints a much grimmer picture. This isn't just a minor disagreement. It's a fundamental difference in opinion about Tesla's prospects. Who's right? Well, that's the million-dollar question. The truth probably lies somewhere in the middle. But the fact that there's so much disagreement highlights the uncertainty surrounding Tesla's future. It's a tug-of-war between hope and fear, and right now, fear seems to be winning. Let's talk about the robotaxi. Elon Musk has been promising fully autonomous vehicles for years, but we're still waiting. Tesla recently held a robotaxi day, but the event was widely seen as a letdown. They showed off a new cybercab and Robovan and talked about a limited robotaxi service starting as early as 2025. But there was a lack of technical detail and safety discussion. It felt like more hype than substance. Waymo, Tesla's main competitor in the autonomous driving space, is already running a commercial robotaxi service and has completed over 4 million paid trips. Tesla is playing catch-up, and the clock is ticking. The promise of robotaxis is a big part of Tesla's valuation. If they can't deliver, the stock could be in serious trouble. It's all about execution, and so far, Tesla hasn't proven it can execute on its autonomous driving ambitions. Here's another wrinkle in the Tesla story: Elon Musk's involvement in other ventures. He's running SpaceX, owning X, formerly Twitter, and now potentially taking on a role in a future Trump administration. That's a lot on one person's plate. Some analysts are concerned about key man risk, meaning that Tesla's success is too dependent on Elon Musk. If he's distracted by other projects, Tesla could suffer. It's like a star quarterback trying to play 3 different sports at the same time. He might be incredibly talented, but eventually, something's going to give. And let's not forget the controversy surrounding Musk's sale of Tesla shares to fund his acquisition of Twitter. The SEC is reportedly investigating the matter, which adds another layer of uncertainty to the situation. Is Elon spreading himself too thin? That's a legitimate concern for Tesla investors. Tesla's margins are under pressure. They've been cutting prices to boost sales, but that's eating into their profitability. In the latest quarter, their automotive gross margin, excluding regulatory credits, fell to 14.6%. That's a significant drop, and it's a sign that Tesla is feeling the heat from increased competition. Other automakers are launching their own electric vehicles, and they're often priced lower than Tesla's. Tesla is no longer the only game in town. They need to innovate and cut costs to maintain their market share. But that's easier said than done. The EV market is becoming increasingly crowded, and Tesla needs to prove that it can still stand out from the crowd. It's a battle for survival, and only the fittest will survive. So what's the solution? Tesla needs to focus on execution. They need to deliver on their promises, particularly when it comes to autonomous driving. They need to improve their margins, cut costs, and innovate. And they need to reassure investors that Elon Musk is fully committed to Tesla's success. But beyond that, Tesla needs to clearly articulate its AI strategy. Is it a car company that's dabbling in AI, or is it an AI company that happens to make cars? The answer to that question will determine Tesla's future. If they can convince investors that they're at the forefront of AI innovation, the stock could rebound. But if they're seen as just another car company, it's going to be a tough road ahead. It's all about perception, and Tesla needs to control the narrative. So what's the takeaway? Tesla's stock is sinking for a variety of reasons: market jitters, consumer confidence concerns, valuation worries, and company-specific challenges. The future is uncertain, but one thing is clear. Tesla needs to prove that it can deliver on its promises. The next few quarters will be crucial. Will they launch successful new vehicles? Will they make progress on autonomous driving? Will they improve their margins? The answers to these questions will determine whether Tesla's stock rebounds or continues to decline. As for me, I'm staying on the sidelines for now. The risks are too high, and the uncertainty is too great. But I'll be watching closely, and I'll keep you updated on any new developments. What do you think? Is Tesla a buy, a sell, or a hold? Let me know in the comments below. And don't forget to like and subscribe for more AI and tech news. Thanks for watching.